First, the big elephant in the room. Netflix proposed $72 billion acquisition of Warner Brothers Studios. It's an all-cash deal for the film, TV studios, HBO Max, and massive content libraries. Total enterprise value around $82 to $83 billion with debt. Announced late last year, but it's not done yet. Warner Bros. Discovery plans to spin off its cable networks like CNN into Discovery Global by mid-2026, then close. Why is the stock tanking? Investors hate the idea. Netflix is borrowing heavily to fund this no huge cash pile. It pulls them into theatrical movies, 4, 5-day theater windows, licensing content to rivals, and managing a traditional studio far from their core streaming strengths. Management distraction could slow growth. Plus, breakup fees. If Netflix walks or deal fails, they pay Warner over $5 billion. If Warner backs out, they pay Netflix to $3 billion. As a shareholder myself, I'm actually rooting for Paramount to swoop in with a higher bid. Paramount's now offering 31 share for the whole company and has agreed to cover that breakup fee to Netflix. Recent updates. Netflix gave a 7-day waiver in mid-February for Warner to talk to Paramount. The board is reviewing if it's superior, but still recommends the Netflix deal. Shareholder vote March 20. If Paramount wins, Netflix avoids the deal, pockets $3 billion breakup fee, and refocuses on streaming huge win, potentially 20% instant pop in stock price. Now, my price target for end of 2026. Wall Street analysts expect Netflix EPS of 3.82 inches fiscal 2027. Current forward PE is about 27x. It's been compressing since mid-2025 due to deal uncertainty. Base case, if EPS hits 3.82 and PE stays 27x to 103 to 104 share. Quick math, 3.82 times 27 is approximately equal to 103. But I think PE rebounds as uncertainty clears. Likely scenarios. PE back to 30x to 115. Share more enthusiasm, 33x, less likely to 126 share. Further contraction to 84. Share still up from current levels. My most probable range, 105 to 115. Share, midpoint 110. From 277 to 78 today. That's about 43% upside by year end. I bought more shares recently and would add if it dips, the core business is rock solid. Upside catalysts beyond my target. 1. Paramount wins. Netflix gets $3 billion cash. No acquisition headaches. Major relief rally. 2. Revenue growth accelerates. Analysts forecast slow down to 13% in 2026 from 16% in 2025 due to distraction. But if Netflix hits 16% plus anyway thanks to anti-password sharing turned $100 million freeloaders into payers and ad-tier success 50% plus new subs in many markets, it proves management strength could reignite enthusiasm. 3. Regulatory approval for the deal removes overhang. No $5 billion breakup risk. Investors look to combined powerhouse in 2027 plus. Downside risks. 1. Bidding war escalates. Netflix counters Paramount higher. More debt, dilution fears, stock drops further. 2. Funding issues. If borrowing gets expensive, might need equity issuance, dilution, pressure. Bottom line. The sell-off is mostly deal fear. Call Netflix best-in-class streaming, password crackdown, ads rollout is firing on all cylinders. Revenue growth accelerated for years after tough periods. This dip is a buying opportunity if you are long-term bullish. I'm holding and adding. What do you think? Will Paramount steal it, or does Netflix close the deal? Drop your thoughts below. Like if this helped. Subscribe for more grounded stock analysis, no hype, just data. Thanks for watching. See you next time.